Hello, chart watchers and DecisionPoint faithful. Welcome to this Monday, November 8th, 2021 DecisionPoint show. My name is Erin Swenlin from DecisionPoint.com, and I am here with my father, Carl Swenlin. How's everything going, Dad?
I'm still trying to catch up with the time change, but otherwise, okay.
Yeah, the time change is always a little bit rough. It's especially rough on my dogs. They don't get that dinner time is an hour later than normal because it's normally at the certain time, and so now they're very unhappy about having to wait. They don't get that, so they're adjusting. A little bit difficult adjustment for them as well. All right, well, let's get into the stock market, which is why we're here. We're going to be covering the SPY, and of course, we're going to go over our decision point indicators. Carl's going to do that, and then he is going to finish by looking at Nvidia and Tesla. I did get those two requested in the trading room this morning, so not a surprise. Sector CandleGlance, I'm going to look at that. We'll get a good feel as to what all the sectors are doing. And then I'm going to concentrate, I'm going to kind of dive on into materials, metals and mining and gold miners in particular, some really interesting formations lining up there. I'm going to look at rare earth metals, uranium, copper. I might throw lithium in there if I have some time. And then, of course, I will finish with the diamonds of the week. So with that, let's go ahead and I'll let you grab the screen, Dad, and take it away.
Okay. All right. We've got a rising wedge formation, which normally, more often than not, will break down. Doesn't mean the whole thing's going to fall apart. I noticed today we had a pretty close to the 1 year daily average in volume. The
VIX, yeah.
Yeah, VIX is squeezing and reaching down towards the lower band. And that would be an oversold reading as we display the VIX here. I'd like to draw a little longer term. We've got the 1 year daily bar chart with advanced decline line. We have been lagging on the advanced decline volume, but it is now confirming the new price highs that we're seeing. New highs and new lows contracted today, which is ultra short-term bullish, bearish, but not anything to be terribly worried about. Let's look at the silver cross for the three S&P averages. It's still rising. It's still low, but considering it didn't really hurt anything for it to be down at 40%, it's not so bad now that it's in the high 60 percentages. Mid caps, they're actually stronger than the large caps, and the small caps also stronger. So we got in terms of participation, it's increasing, and it's increasing across the board. Wanted to look at the monthly chart. We don't normally, but just to emphasize, we're in a parabolic arc here, and that's not a good thing, but we never know really when the top will be reached, so just something to keep an eye on. A climax assessment. Not really anything today, is there? I don't see. I don't with the S&P being this low. I don't expect that the NYSE is going to change at all.
Yeah, net advanced declines. None of that's really looking too climactic.
Our bias assessment, well, again, we've got a rising Silver Cross Index. The Golden Cross Index is kind of flat. It's rounding out a little bit, but again, it's reading 83%. So again, that's not anything to worry about. Short-term indicators contracted slightly, which is appropriate for us, the kind of movement we had today. Again, we have a negative divergence, and this would be considered a top. So watch out in the short term. ITBM and ITVM readings, they're still climbing, but they are modestly overbought, that being an intermediate term view. Let's flip over to see what we had on Bitcoin today. Yeah.
Finally, the flag is trying to actually execute.
Well, we had a flag breakout, pull back towards the line, and then last two trading days we've been going higher.
All-time highs are on their way.
The dollar index slightly down today, and a rising wedge formation, which, as I say, usually breaks downward. And because the dollar was down, gold was up today. We've kind of got a trading range going, and we've got a double bottom. So when we get up to here, it would be significant if gold breaks above this this line here, that line of resistance. Oil, we had a rising trend channel. Well, actually, we had a rising wedge here, which it broke down from. Trend channel broke down from that, and now it's in a process of moving back towards that line. Notice we've got a support line here, another support line here. I'm not seeing this line being challenged. I mean, that's my opinion.
Mm-hmm. Well, the indicators seem to bear that out. I mean, only the PMO is still declining, but it's flattened. I mean, stochastics look pretty good.
Right. T-bonds, another rising wedge, and I'm not seeing them go a lot higher under the circumstances here. Again, that is my personal opinion. The 10-year Treasury yield did go quite a down move here, but it has bounced back to this line of support. It looks like it closed right on that line, maybe teeny bit above it.
Yeah, it looks like it got 1/100th of a point higher than the 50-day moving average. It just managed to climb and close above it.
Right.
It's a lot of support there. So that's, why I haven't been looking for it to just completely collapse here.
Okay, and we were going to talk about Tesla. Let me move to another group here where I have some, I don't have it in this group. Never mind. Okay, let's just get it up there. So we had a nice vertical move here, and now we're just pulling back from that. I don't see any feeling in the market that things are falling apart. But I mean, when you get this kind of move, you're going to get some retracement. There's a story about Musk was asking people whether he should sell 10% because he doesn't get a salary, you see. And so if he sells 10% of his holdings, he can get some money to pay his electric bill.
Maybe the tax bill, I don't know.
Right. Okay, and then let's look at what I came here. One of the ones, Nvidia.
Yes.
I don't know the story behind it, but it made a huge move on Thursday, and it's basically consolidating now. And looks like we're due for some earnings.
Yeah, I was just going to look that up for you while you're talking about the chart.
Okay, I'm sorry, this messed me up. They're coming. There's the quarterly earnings right here, so we'll be.
They're due November 17th.
Okay, there you go. But anyway, it's nice that it's made the vertical move and is consolidating that move instead of falling right back down. And that will do it for me.
Oh, yes. Okay. Well, let's pass it back over here. What I'd like to look at here is the sector CandleGlance. And I did have somebody after our show on last Monday about how to find the sector CandleGlance, how to get the CandleGlance. Well, for me, it's pretty easy because I actually have a sector chart list, so I can use that. But if you don't have one, this is the easiest way to get to a sector CandleGlance. So you just come to this sector summary on the home page, and then underneath you can choose the RRG, CandleGlance, Perf chart. I am going to choose the CandleGlance, and there you have it. Now, mine probably will look different than yours because I have a CandleGlance style that I like to use. It is a 6-month chart, I believe, 5-month chart with the PMO, 20-day EMA, 50-day, and 200-day on it. So if you want to have your own sector CandleGlance, well, your own CandleGlance style, just set that up on StockCharts and then save it, that chart style, as CandleGlance. And then every time you call up a CandleGlance, it will look just like this. So this one includes the S&P. But mainly what I love to do with this one is just to look at it. It just gives you a really great visual feel for the momentum, if nothing else. And when I was looking at this chart on Friday, I was really impressed with the way XLC had these two rising bottoms on the PMO. We were getting this bottoming looking formation here. And really all we were waiting for was a breakout. And we didn't get it today, but you can see momentum is still moving to the upside. And so I think that there's still some possibilities here. If we go, again, generalized, financials really losing a lot of momentum here. We ended up with a negative crossover, a sell signal there. You can see that utilities, real estate, while there's still positive momentum going on, they're turning down or they're flattening out. Healthcare, same sort of thing on that pullback. We're seeing a little bit less momentum moving in the right direction. What looks good? XLI still looks great. Materials, which I'm going to talk about, still looks great. Energy's on a sell signal, but it does look like we might be coming out of that on a bounce off of that 20-day EMA. And as I said, I like the look of comm services, but tech and consumer staples has been sort of a stealthy sector that's been showing some strength. But right now I'm going to concentrate in on the material sector as I was talking about. And let me get my sector chart for that. I was also asked where you can find these sector charts, and you can find them on our website at decisionpoint.com right here. If you're on our blogs and links page, these are the sector chart list, the sector chart list right here that you can get to. Now, of course, these are subscriber only lists, but if you want to see them anytime, they're right here for you, and Carl keeps them updated with annotations. So you can download these sector charts, but you're not going to get the up-to-date annotations on them unless you get them off of our website. So just FYI there. So there's XLC, like I was saying, we were getting that cup shape here. We talked about it before we went on air here. the fact that we do currently have an intermediate term trend model neutral signal on XLC. And it is the only sector with a neutral signal. Everything else in the long term, including XLC, are on buy signals. And in the intermediate term, this is the only laggard, and we're just waiting for that signal to change. As long as price remains above that 50-day and 20-day EMA, that will bring those EMAs back up, and that's what would give us that crossover. But there's a lot of margin here. We really do need to see a nice breakout on XLC. But as I said, I was going to drill down into materials. There we go. And, you know, I've liked materials. I own a lot of materials. And I was really pleased to see this breakout. The one reason it wasn't one of my sectors to watch this week was because it was sitting up here against this overhead resistance. But today's move to the upside really, I think, is giving materials an even more bullish outlook, if you will. PMO is rising. It's not overbought. We've certainly seen higher readings there. And if we really dig down under the hood here, here's our silver cross and here's the golden cross indexes. And notice both of those are rising. We have a really nice percentage on the SCI at 78%, and golden cross over 92% of the material sector have their 50-day above their 200-day EMA. And one of the things I know we've talked about before, Dad, is that, you know, if a chart has a 50-day over its 200-day moving average, that's basically a bullish configuration in the long term. You know, it's a bull market setup for that particular sector, ETF, stock. So when you see when you can see 92% plus, that tells you that pretty much most of the charts in the materials sector have a bullish bias in the longer term. So that's a great number to see. Now, while we are not getting a rising trend on participation here for materials, they are staying at that nice 70, 65% level, moving sideways, which is just fine. And, you know, I don't see anything too bad here. In fact, you can see how relative strength is really starting to kick up into gear here in November as well. Now, one of the things you skipped on purpose was gold miners, because I want to delve into the gold miners, and then we'll look a little bit at XME, the metals and mining ETF as well. So let's go right here. And, you know, I really like the setup on the gold miners chart. I think last week we were talking about how gold miners are pulled back, and if we could get that move to the upside, it would set up a nice reverse head and shoulders. And sure enough, that's exactly what has happened. The GDX chart, you can see the neckline. It's drawn from, you know, between the left shoulder and the head right there, that trough. And then you can see, or a top in this case. And then between the head and the right shoulder, there's the other, that's the other top. We draw across that for the neckline. So we have a slightly rising neckline, and GDX is going to need to penetrate not only this level of resistance, but it's also going to have to get above the 200-day EMA. And then it does have to also get above the neckline of that head and shoulders. And, you know, overall, when I look in here, I have to say, looking at this and seeing that silver cross index turning down isn't particularly great today. But I also note that we have 90% of the gold miners have their price above their 20. 83% have it above their 50, which tells me that this condition is probably going to be changing, and we will start to see that SCI moving up. Notice that nice little PMO turn into a buy signal right now on GDX. I really like the look of this chart. We don't have the breakout yet. We don't have the confirmation of this reverse head and shoulders, but boy, is it really set up nicely. And I have to say, when I ran some of my scans today, I did end up with 2 gold miners that I'm actually going to share as my diamonds of the week for you this week. But before we get to that, let's go ahead and start really digging in. Let's look at metals and mining. And this sector is starting to look really interesting. I'll try and make this chart bigger. We have gotten complaints that they're so small. It does stretch out the indicators, but they still tell us what we need to see. So we have on metals and mining right now this near-term breakout on a nice gap up. Now, I always am worried when you get those gap ups because they could turn into what we call a reverse island. But when you look at the indicators right now on this chart, they're looking pretty impressive. You have an RSI that is positive. Notice that PMO bottom above the signal line here on XME. That's an especially bullish signal for the PMO. Stochastics are now rising nicely. They're in positive territory above 50. We also have, it looks like a new high on the OBV, just barely, but at least that prevented a reverse divergence for us. So I think that that's also a healthy look for metals and mining. Let's go ahead and look at some of these rare earth metals, just some of the areas of the market that did show strength today with breakouts. The rare earth metals ETF would be one of them. I do have to say full disclosure, I do own this one. You do have a really nice breakout that's occurred here. Notice RSI positive and not overbought. PMO bottom again above that signal line. And boy, that PMO is not overbought. It has plenty of room to move much higher. You can see stochastics have now moved above 80, avoided negative territory on this consolidation. We saw that the stochastics turned down, but they did turn up in positive territory there as well. So I really like the look of the REMX ETF. Let's look at uranium. Another really nice breakout here for uranium. Full disclosure, I do own a position in uranium. You've got the PMO just gave us that buy signal. I was starting to get a little bit unhappy with uranium when we hit this area here and started to pull back a second time. But we got that bounce off the 50 on this pullback, and now it's breaking out again. RSI positive, not overbought, and you can see stochastics have moved above 80 and are moving sideways. They stay above 80, that oscillation above that area tells you that there's internal strength, and that's what we're looking for. So we want to keep that, we want to see those stochastics continue to sit right there. All right, copper is another one, and I did get into copper today, actually. I'm not trying to talk up my positions here today. It just happened that this really was an area of the market that just shined up, if you will. And you can see that we've got a nice bounce here from copper off of that 200-day EMA. I've really been unhappy with it just because it's been in this sideways trading range. It really hasn't done anything for me. But now we're starting to get that reversal off the 200. And if we can get it just back up to this October high, that's an almost 9% gain. So I would certainly take that. PMO is trying to turn up. Stochastics are turning up with a positive crossover. And RSI, look at that, just entered positive territory. So I have to say, I mean, these metals, mining, rare earth, all of those are really starting to shape up. They'd had their pullbacks, and now it does look like they're reversing. Let's look at lithium. And you can see lithium had been in a kind of go nowhere pattern sideways for some time. We got the breakout in October, had the pullback to that breakout point, which was excellent. And then it started to take up and off again. The only issue I have with this chart right now is that RSI is overbought. But as you can see with lithium, it can hit overbought territory, maintain that for some time before it really does break down. So for example, back here, it was overbought for 10 trading days. Back here, it was overbought for another 7 trading days. So we just hit overbought territory again. I'm not too concerned about it at this point. And you can see relative strength right now for lithium just looks fantastic. Before I do my diamonds of the week, I have just a few minutes. I want to throw up the natural gas chart because that was a big hit this morning. Everybody wanted to know what I think about nat gas right now. Right now, it's in this position where you've got a kind of this rounded top. We had hit the I thought for sure we were going to get a drop to the 200-day EMA when we got this head and shoulders formation. But instead of, it went through that neckline, which was rising, but then it immediately reversed. And now it's testing that 50-day EMA again. But the indicators just, I don't like them right now, Dad. I just don't like the way they're lining up here. But
I don't like the formation at all. It's, you got to go with that, in spite of the fact that natural gas has got to be going through the roof the colder it gets. But yeah, I don't see a buy signal here for sure.
No, and that's the thing. A lot of people are like, "Oh, this is the buy point, right?" Because you're getting that move off of that 50-day EMA, and no, this isn't. As I tell people in my trading room, I'm a momentum trader, and I don't buy anything where my PMO is pointed downward. I just don't do that as part of my analysis process. So, not the entry I'd want here for sure. Stochastics turning down in negative territory. Not a good look here.
Look at OBV. You've got a reverse divergence on that earlier top, and then we've got a lower low on OBV versus a higher low on price. So it's not a healthy looking chart.
No. All right, my diamonds of the week for you. Like I said, there are gold miners. They actually came up in my scans right before the program. I did scans and I got 2 of them. Barrick Gold is one. And you'll notice very similar patterns here, like we saw in GDX. We've got another reverse head and shoulders here. In this case, the neckline would be a declining neckline here. So the opportunity to bust through the neckline is going to be a little easier for gold, GOLD. But we do have the 200-day EMA. We have some not problems, but there are certainly some areas of resistance here. But I still like the chart as far as a gold miner goes. You can see positive RSI, that PMO turning up. It's almost in positive territory. Stochastics looking good. And then if you compare Barrick Gold to the mining industry group, the gold mining industry group, you can see it's an outperformer. And that's what I really want to see when I'm picking a stock within an industry group that's starting to break out. Newmont Mining, a little different in its look, more of a double bottom really setting up right here. We did see price not make above the 50-day EMA, but notice that we still have a positive RSI. The PMO did trigger a crossover buy signal. The 5-day EMA is getting ready to cross above the 20. It all looks good. And that's it for the show and our diamonds of the week. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.